European natural gas prices have fallen for the first time below their values before the war in Ukraine, due in large part to lower demand and improved gas and electricity supply in the near term. The price for a month-ahead contract at Europe's largest exchange in Amsterdam was trading around 83 euros per megawatt hour on Thursday. Prices spiked in August to more than 300 euros as markets registered a supply shock. That's when Russia began curtailing pipeline deliveries. Livia Gallerati is a senior analyst at Energy Aspects. She joins me for more from London. Livia, welcome to the show. I want to start with gas prices. What does this mean for households and businesses in Europe? Is the gas crisis in Germany, for example, now ending, or is an end in sight?
Thanks for having me. So European gas prices have indeed fallen sharply over the last couple of months, thanks to what I would say a lucky combination of factors for Europe, including unseasonably mild weather, limited competition from China, which have helped Europe build stocks and therefore have dragged prices lower. However, this does not mean we should get complacent here, to be honest. There are still a lot of factors that could lead to tight markets next winter in particular. And that might mean prices rise back up again. For example, China is coming back to the market with the COVID situation easing over there. Industrial demand could be coming back as well in Europe now that prices are a little bit lower. We can't rule out a cold spell in the winter, in the next couple of months. And also Europe will need to balance next winter with a lot less Russian gas than it ever did before. So all of this could mean we're still facing a very hard situation. And even in the longer term, we also need to consider what high prices will do to the European industry, which is something that we'll have to continue to face for many years to come.
I want to ask you about another commodity, oil. Vladimir Putin announcing this week that Russia will end oil sales to buyers who observe the price cap put in place by the EU, G7, and observed by some nations like Australia. Not exactly a surprise, but what, if anything, does that mean for the country's oil revenues? Will it suffer significantly because of this, or is it just sort of moot?
Prices are indeed lower. But, by historical standards, they are not extremely low. And with, for example, the price cap that has been agreed by the G7 that you mentioned at $60 per barrel, that's just below what Russian government budget had been set for, around $70 per barrel for 2023. So we're not very far off from those levels. So I would say overall prices at the moment for Russia are not that big of a concern. I think the biggest factor to consider at the moment is how much oil and gas is Russia able to sell and to export, and therefore how that is impacting overall revenues. If you consider, for example, the European embargo on Russian oil, with that, Russia has lost its biggest market for oil. And we and many other analysts don't think that Russia will be able to shift all the oil that it used to import to Europe to Asia, for example. And that means losses in exports and production and therefore revenues. And it's the same situation with gas, if anything, even more so, because on the gas side, you actually have some significant infrastructural constraints that mean that Russia cannot divert as much gas that is used to export to Europe via pipeline or LNG to Asia.
This price cap was based on the concept, or on the idea, the supposition, I suppose, that Russia would not cease production or slow down production, that it could not afford to do that. Is that true, that it essentially has to continue producing at the same levels and then essentially find ways to divert it across the global economy?
We are not seeing that happening. In fact, Russian gas and oil production has already fallen by quite a lot since the start of the war, and we expect it to fall even further in the coming months as it loses the European market in particular. The problem is that once that production is shut in, it's very difficult for Russia to get it back because of the nature of its oil reserves, which are highly depleted, old oil fields that cannot be switched on and off like a light switch.
All right, that's Livia Gallerati at Energy Aspects. Thank you very much.
Thank you.